Hey guys, Jessie Schuler here, local real estate agent in Central Florida, and today we are going to be talking about capital gains taxes. Now, I will go ahead and say off the bat that this is not the most exciting topic to discuss. However, if you are serious about investing in real estate, you're serious about starting a real estate portfolio, and you're serious about wanting to use real estate as an additional form of income for your future, you need to know what capital gains taxes are and you need to know how they work. So let's start off with what capital gains taxes are. Capital gains is defined as a tax levied on profit from the sale of a property or an investment. So what does that mean? In other words, it basically is a tax on any profit that you make from the sale of an investment home. Now, there are ways to avoid getting taxed the capital gains tax. However, none of these suggestions I'm going to give you are illegal or a way for you to bypass the system. I highly recommend, and I'm going to say this a few times in this video, that you need to find a good accountant or CPA and get very familiar with them, have them on speed dial, be ready to call them and ask them all of these questions. They're the ones that are going to find you discounts. They're the ones that are going to help you figure out legal ways to avoid capital gains if it's possible. One other thing I want to add is everything that I say today, I'm specifically talking about Florida. Most of the country works the same, but again, talk to your accountant. Okay, so what's the number one way to avoid capital gains tax? The number one way for most people is in the first 5 years of when you purchase the home, live in the home as your primary residence for 2 of those 5 years. If you do that, you will avoid capital gains tax. Also, just as a general rule, you get taxed for any profit over $200,000 for a single and $500,000 for a couple. So if you sell a property and you make less than $200,000 individually, or you make less than $500,000 with your spouse or partner, you don't have to worry about it. Another way to avoid capital gains tax, and this is actually what a lot of investors and people who flip houses and that kind of thing do, is to do a 1031 exchange. Now again, talk to an accountant. It is important. They know all about the 1031 exchanges. I am just going to be really broad with my definition of it. So a 1031 exchange is basically using the profit that you make from the sale of a home and applying that to a new property, a new investment property. There are rules and regulations involved with it. There are caveats. So don't just say, oh, I made $400,000. I'm going to take all 400 and put it into this property. You need to make sure it's the right type of property. How much is going to get taxed? How much can you avoid being taxed? All of those things, talk to an accountant. So a few other things that you can do to try and avoid capital gains, or at least exclude yourself from being applicable to capital gains. If you do home repairs, keep the receipts, because sometimes you can apply that and you can get excluded. At least some of what you owe for capital gains will be excluded. Another way is to see if you qualify for any exception. Maybe you're able to be excluded because of something work-related, something health-related, or maybe just something like a stage of life that has happened to you. Sometimes any of the above could be applicable and can help you exclude having to pay capital gains taxes. So again, just to quickly recap, the 2 main ways to avoid capital gains tax is 1, live in the home as your primary home for 2 of the first 5 years that you owe the home. The second is to use that money and do a 1031 exchange, which again is basically taking the profit that you make from the sale of that home and applying it to a different property. Again, I cannot stress this enough, the importance of having an accountant. They will help you figure out all of the legal ways to avoid capital gains if it's possible. You do not want to mess with the IRS. They will always get their money, and if they catch you, there are hefty fines, possible jail time. You just don't want to play that game. So hopefully you found this helpful and you can use these techniques and these ways to avoid capital gains if necessary. And at the end of the day, the surefire way to never pay capital gains tax is to not sell your home. As long as you own it, you do not have to pay capital gains taxes. You only pay capital gains taxes when you sell the home and you make a profit on it. So something to always keep in mind as your surefire way to not have to pay capital gains. So that's all I got for you guys today. Please like, comment, and subscribe to my channel. It really helps me out. If you have a question on this video or a previous video, please also leave it in the comments, and let's see what you can do for you. Until next time.